Hello, I'm John Treadgold for the Finance News Network, and joining me from the Prosima Global Property Securities Concentrated Fund is its portfolio manager, Marc-Andre Flajole. Marc, welcome back to FNN.
Good to be back, thanks a lot.
Prosima invests in property all over the world. Can you give us a brief overview of the fund and explain what sets Prosima apart?
Prosima is a boutique investment manager with a track record of its product dating back to 1999. We are all in one location, based in Montreal, Canada. We're a team of 12 investment professionals. What sets us apart in our concentrated strategy is the fact that we hold only 30 to 40 securities globally, so a very differentiated approach from our benchmark. Roughly 50% of where we invest is North America, close to 13% in Europe, 30% in Asia Pacific, and the bulk here in Australia, about 7% of our fund. And again, what sets us apart is being very different from the benchmark, being very concentrated, but also running a very high active share portfolio.
Now, Australian property has surged in recent years. How does that compare to international markets, and what trends have you recognised between the two?
Yeah, you're right. Australia has been a very strong REIT market over the last 2 years, and that's really a function of strong demand we're seeing on the private real estate side, which really drove up valuation levels of assets, and also easier monetary conditions that we've seen with the RBA lowering the rates and interest rates level in general that have come down. So very supportive of property here in Australia. It compares very well on a global basis. If you look at markets that actually outperform the Australian market over the last 2 years, the US and the UK are standouts. These markets have seen quite positive fundamentals, but also very strong demand from an institutional perspective on the direct real estate side. And contrasting that with markets that didn't do so well, my own country of Canada, REITs have been struggling and underperforming global peers on relatively weak fundamentals in the retail or the office space, but also due to the fact that Canadian REITs are typically offering investors very, very little growth. And they're also highly levered compared to the global counterparts, having a leverage superior to 40% on average.
And where does Prosima see the greatest opportunities?
A couple places. If you look at 2015 so far, it's been a relatively strong start for the year overall for the global REITs. Recently, it's been a bit more difficult, especially in the United States, with all the noise around the Federal Reserve that might increase rates relatively soon. So the REITs have been sold off by generalist investors mostly. And we feel as specialists, it's a pretty good entry point at this point. If you look at US REITs, they're trading now on average at 7% discount to the net asset value of their assets, their real estate assets they hold, which is now, compared to the historical range, 2 standard deviation below their standard valuation or their average valuation. So we feel it's, again, a very attractive point for US REITs, coupled with the fact that we are expecting 6 to 7% growth from an FFO or earnings perspective in the US, which is pretty sound fundamentals supporting earnings, but also dividends. Other teams we like, Japanese hotels. It's a very niche sector, but there's a large touristic boom in Japan at the moment, driven mostly by other Southeast Asian visitors, and the bulk of it is China. So the hotel landlords in Japan, there's a few J-REITs that are operating in that sector, and we're very positive on them. Finally, another thematics we like, UK student housing. We've been investing in that sector for a while. Very steady cash flow, very steady growth, but also we feel that institutional demand will come to that market on the direct real estate side, which will support valuation of REITs, which trade at discount at this point to the transactions we're seeing in the direct market.
And looking at Prosima in more detail, how have you done over the last 12 months?
It's been a very strong year for us since the inception of the fund here in Australia, but 2014 was a good outperformance year. We outperformed our benchmark by close to 380 basis points, and the absolute performance was about 20% based in US dollars. So very good year. 2015 so far is off to a good start for us. We're outperforming by approximately 200 basis points. So again, a very strong alpha creation from our perspective. And over the long term, so beyond this year, since 1999, the inception of the concentrated fund, we're adding slightly more than 200 basis points per year of value. So the fund is realizing its objective.
And what are some of the risks that you've identified on the horizon, and how do you invest in that environment?
Yeah, a couple things. Some things we watch very closely is obviously the macroeconomy. At the end of the day, this is what affects real estate fundamentals for REITs. So the macroeconomic situation globally is something that needs to be well assessed from our perspective. On the horizon as well, if you look at the acquisition market, real estate values globally have gone up quite a lot. So it's difficult for REITs at this point to find good value in acquiring assets. So it might slow down the growth in their earnings through external acquisition. Looking at the level of leverage now globally, it's around 31%, which is one of the low points we've seen in recent history. Cost of debt is very cheap, very accessible debt as well. So a risk we're watching for REIT managers, the potential acquisition of assets that wouldn't necessarily be of average or subpar quality, given the very easy access to capital. It's very easy for them to acquire these assets and to get relatively good accretion in the short term, but we're more worried about some of the long-term prospects of assets being acquired. Looking at Japan as an example, we are seeing some J-REITs now acquiring assets that are a bit of a subpar quality for yields that make sense today, but we're not sure that these yields are sustainable for the very long term. So the assets make sense today, but that's mostly because of cheap cost of debt.
And just to finish off, how do you see global property performing to the end of 2015 and beyond?
2015 started very well, but recently it's been a bit more difficult for North America specifically. So the U.S. REITs have corrected. So we think at this point that the performance should be quite strong for a couple things supporting the REITs. We feel the fundamentals. We are expecting 6 to 7% earnings growth this year and next year, and that's fairly supportive of most of the sectors, not only in the U.S. but globally. Certainly supportive of dividend yields, which is a strong point of global REITs, obviously. We're also watching closely the demand for direct real estate, and we're seeing in many jurisdictions in the world some strong demand still as of today. The REITs, since they are trading at a discount now to the real asset or the real estate asset value we're seeing, typically if demand remains very strong, it's a good predicament for future performance. So at this point in time, the discount is actually auguring well for the performance for the rest of the year.
Marc-Andre Flagel, thank you for the update from the Presima Global Property Securities Concentrated Fund.
Thank you very much.